just talked about real-world assets. Now I'm back to talk about CBDCs. Real-world assets, super excited. I can see a real use case. I can see a real benefit to humanity. CBDCs, I'm not sure. So maybe my esteemed panel will change my mind. Every government is racing to CBDC. Everybody wants some, but really, let's start with the first question. What is CBDC and what is not a CBDC?
Yeah, I think that's the million-dollar question, right? And for the last 7, 8 years, where I've been involved in different CBDC projects from Sweden to England, Asia, you name it. The question is, what is it really, right? I mean, it stands for a central bank digital currency. The thing is, we already have digital currencies managed by central banks. So then a lot of people say, oh, it lives on a blockchain. But most of these projects actually don't live on a blockchain, right? They live, if you're very lucky, they live in a sort of a distributed database. But most of the times, that's not that either, right? Then there was this sort of hype where we said, okay, we can actually help bank the unbanked about this, right? And there's some really good use cases, and specifically South America and also China, who actually created a CBDC who allows for sort of thresholds. So people who could not get bank accounts because they didn't have a national ID or they were under a certain threshold, they could use their mobile phone and get direct access to a digital version of the local currency, and by that actually enter the economy. And I think that's really where we have to start with this discussion, right? Because if this should be really valuable, we need to expand the features of money. So if you're a politician or you're a state, and you only have fiscal and monetary policy to do with, you are getting locked in, right? So what we need to do is we need to kind of look at how do we expand the features of money to serve the population in our country by changing the narrative between the corporate banks and the central bank.
I mean, if I was to sum it up, I mean, very simple. CBDC is public money. Stablecoin is private money, and Bitcoin is no one's money, basically.
Bitcoin is what?
No one's money.
It's no one's money. It's the people's money. So, Carl, why are governments racing to implement CBDCs from your perspective? You're the infrastructure layer within the virtual asset space. From your perspective, forget about, the bigger, is it good for humanity or not? Is it control? Like, from the infrastructure perspective.
I mean, CBDCs, I think, are a natural evolution of what's happening in the digital space and especially the Web3 space. I mean, if you're a government and you've been issuing money, fiat money, and printing money for as long as we can remember, the next evolution for that is how do you do that in a digital way, right? So if I'm going to wear a central bank's hat, and obviously I'm not a central banker, but their main responsibility vis-a-vis the country they're in is, managing the money supply, controlling inflation, etc., etc. So for me, it's a natural evolution, and I think they're playing catch up with everything else, right? I mean, stable coins have been around now for a while and are proving their the reason they're around, right? Instant settlement, cross-border transfer, 24/7 money, and obviously now with the use of AI agents are operating or will operate on the blockchain or for payments, etc., etc. So for me, it's a natural evolution. There's part innovation and there's also part control, right? They should still be able to control what is, at the end of the day, public money. So there are concerns, and I'm sure we're going to talk about some of the concerns. Privacy is a main one. But it was meant to happen. Now it's happening at different speeds, depending on where you are. We know here in the UAE, the central bank is pushing hard and is ahead of schedule, but we were talking earlier about the Nordics. The Nordics had started conversation about CBDCs, and it seems it kind of faltered. So depending if you're an emerging economy or a developed country, there's different reasons why you would want to have CBDCs in place. And if you look at it from a retail investor or anyone in this room versus a wholesale or government entity, there's different pros and cons for each.
And so let's take a room temperature check. Who is Who believes the government's promise that CBDCs will make this place, will make this world a better place and it's for the better of the humanity? Anybody believes the central bankers or the governments? Who thinks maybe we don't really need to push into the CBDCs and who prefers the stable coins better? Who likes cash? Who likes shells or other alternative barter methods, including Bitcoin? Anybody likes Bitcoin? Okay, so we have a bit more of a libertarian crowd, which is fantastic to see. Welcome, everybody. So, Frederik, do you think there is an optimistic use case for CBDCs? Would they, can we really believe the governments that it will improve things, settle things faster? What is the most positive use case?
So I'm going to lean out of the window a bit and say, we absolutely, certainly need CBDCs. But we don't need a new version of digital cash. This is not it, huh? So why is it we need CBDCs? Well, if you look back a little bit into the history, and I think most people sort of, at least in this room, is not too far off my age group, right? You remember a time where there was no internet. And what the internet really took away from the state was the control over identity. It is just a fact today that in 99% of all countries, the national ID gives you privilege, but they don't actually have the information which a Facebook or a TikTok or whoever has about you, right? And the pushback for that was regulation. Specifically in the European Union, you've seen a really, really tough regulation about privacy, and they basically put in rules where, we're talking double-digit fines of your revenue if you breach what's called EU GDPR. Now, blockchain was sort of this little pet project from the people, for the people, and it was not really, so dangerous. But suddenly we saw that Bitcoin got real traction, and a few governments tried to shut it down, and they did not succeed. No one mentioned, nobody forgotten, right? And then on top of that, we saw this huge push in two large stablecoins, right? And both of them actually now being critical infrastructure in terms of capital markets, meaning that we actually have teams in national banks who is monitoring the liquidity of those stablecoins in order for managing inflation and capital markets. And when you look at it from a politician perspective, you're now seeing, okay, hey, this is a threat that we might lose control. But if you look at from the other side, there is this dream that we actually finally have a way to serve the constituency in our country, but we need to expand it. So if you look at the COVID crisis, or whatever we call it, depending on what side you are of the fence, a lot of politicians simply had no data, so they just gave $1,000 to everybody, and you saw travel was spiking and crypto trading was spiking because everybody just got free money, right? But if you really want to go where it really helps people, what you need is a tool like Cardano and Midnight, right, where you have the ability to say, I'm going to share with the state nothing. But if there's a global crisis coming and I'm a barber shop, I can share the last 3 years of revenue and client flows so they can give me pro rata what is owed to me so I can survive through the crisis where they shut me down. So if we start adding these kind of features into this, and this is really what the politicians want, but they're being forced into this corner of privacy versus public versus compliance, right? But what the politicians really want in most countries is there a smart way I can service my constituency by this new tool? Looking back at the crisis, looking back at monetary and fiscal policy who's actually not doing what they wanted to do.
I like how optimistic you are. You actually genuinely think politicians want to service the people. It's a little bit optimistic. We have a lot of people from the parts of the world where the government has been showing over and over and over again that the governments do exactly the opposite. They take from the people, and every chance you give them, they'll take more from the people. But this is a very nice, beautiful, beautiful approach, a beautiful point of view. Carl, from the markets and the liquidity perspective, we have so much infrastructure already. We have the fintechs, we have the settlements layers. Do we really need CBDCs? I mean, they promise to settle T+0, right? Will that really deliver?
I think from where we stand, and again, people in the room, ourselves as XBTO, just to put things in context, we're basically a market maker. At the same time, we manage digital assets in a quantitative way. So we obviously use, and every trader in the room, and I think there's a lot of traders outside too, we need stable coins, right, for settlement, for liquidity. It's very frustrating today when you move from, on-ramping to off-ramping. Someone sends you a bank transfers, it takes 3 days to arrive in your wallet, and then you're able to kind of put that to work. So does it solve? The problem is already solved. We have stable coins, and we see the adoption of stable coins, and there's different use cases. We use, as corporates that trade, we like USDC. If you look at emerging economies, they like USDT because it's more for cross-border remittance. So I think we've already solved that settlement issue. And the reason why you have settlements is because you have those, players in the middle, right? Intermediaries. And that's a way for any banks to make money today. The same case, a very big innovation in crypto is perps, right? That never expire, and you don't need to roll them over. In traditional finance, you have those contracts that have expiry, and then you have to continuously roll them over. Why is that? Because it's a way for people to make money, for those banks to make money. So do we need CBDCs for that? No, we don't. We have stablecoin. Now again, if I'm not going to be, I'm going to wear my central banker's hat and I'm a government, it's one way to say, well, we would rather deal with public money than with a private issuer. What if something happens with those private issuers out there? Who's going to still be around, 10 years from now? Because there's a lot of stable coins being issued today. There's also banks that are issuing stable coins. There's consortium of banks issuing a euro stable coin today in Europe. A lot of them won't be there 10 years from now. I still believe a bank issued stable coin might not stay for long, especially if you're not, public. On the public, you're just a consortium of banks. There's going to be issues with adoption and all of that. But yes, we do not need CBDCs for instant settlement because we have instant settlement for with the use of stable coins. But you will still need CBDCs for everything government to government, and hopefully to make central banks more efficient when they talk about monetary policy, when they do quantitative easing, when they do quantitative tightening. I think it's going to be a better tool than cash today. But that's it.
Well, my issue is that CBDC is meant to be a programmable money, right? But then the question is, what is being programmed? Who controls the program? Who decides that I've been a bad person last week, so we need to switch off my access to my own money? And that I would consider a threat, right? So we talked about the opportunity, now the threat. So Carl, do you think we potentially, with some governments, can walk into a total surveillance state where your every step, and I don't like that Carl drinks water. I want him to consume Coca-Cola because the Coca-Cola just sponsored my re-election yesterday, right? So you can spend your CBDCs only on that. I mean, I know it's ridiculous, but we've seen more ridiculous things coming out of governments.
We do. I mean, it's a tough question. For me, for CBDCs, the only role of the central bank should be to set the guardrails, right? They should set the guardrails. Commercial banks should be doing the distribution, and then you would have developers that build on top of that, right? It can become dangerous if the central bank is also in charge of the programming and also potentially in charge of KYC and all of that. So I think the only way CBDCs are going to be successful and at least adopted you need mass adoption, is making sure that they are these guardrails. Because if not, to your point, you could instantly shut off someone's access to money for whatever reason, and it can be weaponized in some ways. Now, I'm not saying in every country, but it could happen in some, yes.
What do you think, Frederik?
I think it's about the scope, right? So the Swiss National Bank has actually done something called eCash 2.0. There's a really nice white paper on the technology, is public source, so you can go out and replicate that, which basically created physical cash just on a type of blockchain where there is a higher level of privacy than we have with the US dollar in physical form. Huh? So I think when we discuss these things, I think it's really about, what are we trying to do and why are we doing it, right? And I do have really large concerns with some CBDC projects that is waste of time because they're digitizing something that was already digital, and they're removing privacy because they want more control. And that is, I think, is a real concern in many countries, and we should be really wary about that. But I also do hope that we get better at voting, right? I mean, what's so magical about where we sit today in Dubai is a lot of people voted with their feet, and they came here and they live here and they built a business here because they were unhappy with their home country, right? But we need to challenge potentially democracy and also participation. There's basically two people in the world, right? There's the people who's just trying to optimize their life for themselves, and I have huge respect for them. And then there's people who walk a harder path and said, I do not accept the financial and social systems of this world. And they start contributing to the blockchain space, but also to these debates about CBDCs. And they sit with the central bankers and they educate the central bankers, because I don't think necessarily the central bankers are evil. They're working under a mandate. And that mandate needs to be challenged, but it can only be challenged if you have the education and the understanding. And we see that with algorithmic trading coins, right? So, I mean, I don't know how many of you who noticed or was watching a couple of Fridays ago when we had the big market correction. How many algo stable coins actually kept their peg, right? I know 2, right? Out of the 15 I've been watching, right? So maybe there's more. I stand corrected. But we are in a situation right now where we cannot really replace central bankers like in German we say the Handwerk, so their skill set, with something as complicated as an algorithmic stablecoin. Now that being said, I don't think we cannot do it in the future. I'm just saying we're not there yet. And that's why we see these asset-backed stablecoins like just mentioned USDC and Tether is booming, right? And we see proof of custody and proof of reserves. But even though stablecoins were not faring that well necessarily across all exchanges a couple of Fridays ago, right? So we do have some design we need to do, huh?
I have a follow-up, Frederik, if I may. Do you think CBDCs contradict the whole ethos of decentralization, something that we are fighting for and building?
So again, I want to be clear. I'm leaning out of the window and I say, I think that if we had a well-designed, CBDC with a good governance layer, it can serve more people than it can damage. Unfortunately, that's not what we're getting right now. We're getting ill-designed, very centralized CBDCs who has the same controls and the same flaws in place as we have in the fiat world, right? And in such a world, you will see Bitcoin and other things will be striving, right? That being said, I mean, some of it is also due to a lack of education and a lack of opportunities. I mean, how many, hand on your heart, truly understand the difference between Austrian economics and Keynes economics, right? How many politicians truly understand whether we should, in crypto world, burn more fiat or print more fiat, right? I mean, let's be quite honest about that. They're taking some really big decisions, which is being delegated by us as a population, right? And therefore, I think this CBDCs is so easy, right? Because it's just a digital currency, and then they look good, right? They do something digital who might have a good opportunity in the future. But if you look at what Stockholm did up in Sweden and what the Bank of England has been doing the last 5 years, they did huge proof of concept and pilots and figured out they were not ready for this, right? And I think that's a good state as well. Saying no to something is sometimes better than just going with the flow.
Talking about England, something like 4,000 people went to prison for posting or sharing something on Facebook that the government didn't like, right? Imagine that's a perfect tool. Let us switch off their CBDC wallet so they have no access to internet or electricity to post on Facebook. So that is my main issue with CBDCs and some governments. Carl, the question I get asked all the time is, now that we'll have CBDCs very shortly, we will not have any use case for stable coins, and we'll definitely have no use case for Bitcoin, which boggles my mind that people would even think that. But I get asked this question all the time. What would you answer that?
I mean, I think there's zero correlation between you know, the fact that there would be CBDC and what would happen to stable coins or Bitcoin. And the other point is if CBDCs, right? Because we're not there yet, and even when we are, will it even be, you know, how will it be implemented? How will we be using it? So for me, there's no real correlation between those three assets, I would call them. If anything, I mean, stable coins are getting more and more regulated, which is, you know, the evolution of things. It was deemed to happen. Bitcoin maxis are like, well, is Bitcoin still decentralized or is it becoming centralized because there's more and more companies owning Bitcoin, right? So it's kind of an evolution of thing, and it's an evolution that's necessary if you have adoption and institutional adoption. So obviously pros and cons. So stable coins are becoming regulated. I mean, even Tether is issuing their US stable coin, right? If I'm not mistaken. So there will be stable coins, like I said earlier, that won't be around 10 years from now, 5 years from now, because either they cannot be regulated or do not meet the necessary criteria. And as for Bitcoin, if anything, I think Bitcoin is here to stay. I think there's no doubt about it. And for players like ourselves, we will always need stable coins to basically run investment strategies or to be able to go on-ramp, off-ramp, etc., etc. The last point I'll make around that is CBDCs, again, how will they be implemented? Who will be owning it? Is it going to be every country will have their own CBDC? We're talking about 190 of those. Is it going to be consortiums? And from what I'm seeing today is there's more adoption by the big banks. Again, Citi yesterday announcing a partnership with Coinbase that shows that stable coins are here to stay and being adopted by the banks that at the end of the day own distribution to all of us.
Yes, and if anybody wants to issue their own private stable coin, that is possible in the UAE under ADGM regime, under VAR regime, or an AD-backed stablecoin under the central bank regulations. So we have 3 regimes to do that. Switzerland has just introduced a stablecoin act, the draft. So eventually that would be possible in Switzerland as well. But UAE is really ahead of the game on the private money, on the stable coins. Frederik, Cardano is working with multiple governments or supporting them on national identity programs, the blockchain frameworks. What are the biggest technical and governance challenges that you see by the governments introducing CBDCs, introducing the identity frameworks? Do you think they even understand what is happening?
It's really hard to speak about, you know, the spaceship Earth we live on, right? Because it's so different depending on where you are. But I do think that, you know, whether we agree that some politicians are good and not all bad is a large question, right? But I do think that they do truly understand one thing, right? And that is that identity is the key driver to merging the offline world with the Web 2 world and the Web 3 world. If you do not have a good digital identity in plural, so it's not about a national identity, you know, or something like that, but it's in plural, so it's everything from crop dusters and Massey Ferguson tractors and satellites, you know, that you're able to trust that data and you know, verify and validate that data all the way to what we do, which is the legal entity identifier, which is coming out of the global banking conglomerate, right? And basically moves 80% of all world trade, whether physical or paper trade, right? And is first level quantum secure. It doesn't really matter. It's this idea that you need to have trusted ways to basically have a higher output because your input is getting smaller and smaller. Most countries are really struggling with, you know, deficits, right? So basically they're being told you need to do more with less money. And one of the things we use is technology. And their digital identity becomes the key driver. The other part, which you asked, is sort of a little bit more tricky, right? Do they truly understand CBDCs? I'm not sure I understand CBDCs, right? But if you ask them, do anybody truly understand money? I don't think a lot of people truly does. And I think one of the things Bitcoin gave to us outside, you know, a fantastic protocol and the asset called Bitcoin, was a lot of people starting to educate themselves with what is money and what does it do. And I think if you're on the Orange Pill app, for instance, or something like that, you meet people who really went down into the rabbit hole and are able to understand economics in a way we don't teach in school. And I think we have an urgent need to understand this, cross-pollination we see among countries and how money actually works and flows. And we should be spending more time on that, because in the end that can set us free. But it can also be the prison for the rest of our lives.
Absolutely. I have my first degree is economics, and when I truly started understanding what money is by learning what Bitcoin is. And if you haven't read the basic books on what is Bitcoin, you're really missing out, because everything else becomes irrelevant. Money, private money. Carl, do you think the banks, and let's focus on the UAE for a second, so the banks that will be issuing the private stable coins, the private money, do you think they will actively use CBDCs, or they don't need to, they'll just focus on their own issued stable coins?
I mean, the simple answer is the banks are regulated by the central bank, right? So if the central bank asks them to use CBDCs, they will. One case we have today, I mean, yes, the UAE has been at the forefront of digital asset adoption, but we all know today, players in the Web3 space, how hard it is for us to even open a bank account today in the UAE, right? So, and it's only very recently that some of these major banks can receive what we call NOCs from the central bank to service Web3 players or crypto players. So at the end of the day, those banks are regulated by the central banks. In our case, for example, we're regulated by the FSRA and ADGM. If the ADGM comes up with a new, rule in their rule book, we're going to have to abide by it. So the way I see it is, again, the central bank should set the guardrails for those CBDC, and the distribution is going to be done by those banks. So once this happens, and it will happen in the UAE, and we're fairly close to the central bank in some ways. And what I like about the region here is that most of the regulators usually, build a consortium and talk to the market players to really see what makes sense and what doesn't. And there's a few things that didn't happen because, the private sector wasn't really supporting it. So yes, the answer is yes, is the central bank is going to issue whatever they need to make sure that those commercial banks today, or any bank we deal with in the UAE, will have to adopt. And at the end of the day, the way I see it is CBDC will, in some geographies where it's well implemented, will own the local payment system, and everything that's international and cross-border will be still run on stablecoins.
Do you want to add something, Frederik?
Yeah, I think in many countries we have some kind of democracy, right? And you vote. But how do you actually know when you vote that your vote has been counted and it's been counted correctly? And the answer to that is you don't, right? You have to take for granted that the institutions or whoever counts the votes or whatever kind of system who's in place, that this is, trustworthy and so on. But this decides the politicians, right? The second question, in many, many countries, not all, but in majority of the countries, as you rightfully says, the banks are regulated by the central bank or by some supervisory authority. But does anybody actually know who regulates the central banks? Because most of the cases, there's nobody regulating the central banks, right? Because there's actually nobody who has the skill set or the mandate to do so, so they're basically responsible to themselves. And you can argue, well, okay, Fred, you're coming from a Swiss foundation, and they're also kind of, but we actually have an external supervisor looking over our shoulders, right? So I think there is an answer here to be found in, if we want a world where people are more accountable, and we need to be able to verify that. To verify that, we need strong identities, right? It doesn't matter that if we have to pull our pants down or not. I'm really on the side that we should not pull our pants down, right? But we need to have a way to say, I only voted once. There was no double spending, right? I can go in, I can trust it, but I can verify it. And when I use those words, they are directly out of the Bitcoin white paper, right? It's out of the blockchain ecosystem. And when you use those words to the people who try to make some governments better, right? They understand this. This is not so far away from what they want. So I think us as an industry in blockchain, we now finally has the tools, right? Bitcoin could only have one type of identity. Cardano supports multiple, so does Ethereum, so does AVAX, and so on, right? But I think as an industry, there's a few of us who should start banging the drums and start showing, you know, what would a CBDC be who actually serves the people, who has real privacy, who optimizes and settles in T+0, who has atomic swaps, where I can verify my contribution, right? Maybe I have fungible money, right? That would be really nice, right? Because with fungible money, we can cut thousands of jobs in compliance, right? Because we can basically, you know, we can run a machine learning on it and we can verify it straight away, right? So I think some of it is also us as an industry. You know, we've been building in secret for so long and hoping. Maybe it's time now to stand up and show them what we got.
One point I wanted to make, and it's something we're living day in, day out this year. I think the global theme of this year is trade war, right? And everyone's being impacted by that. We're moving from a globalized economy to more like putting barriers between countries. So just imagine CBDCs, how these could be used in kind of a weaponized way for these trade wars, right, today. From one day to the other, you would be able to switch the tab for anyone doing trade between one country and another that might not agree with, you know, the politicians' view or all of that. So I think there are very big risks, and more now that we're moving more from globalization to like setting up all those barriers between countries and protecting our own economies. And that could also be the failure of CBDCs, because if you don't have this interoperability between the different countries, if we're going to have 190 CBDCs, it will also lead to the failure of those.
But that's exactly why we have a world reserve currency, right? We had since the Second World War, right? And I think, you know, the larger question here is that, I mean, the way you kind of frame it is that the dollar is a kind of a CBDC who has consequences when you deal with it, right? And there's a reason why you need stable coins, right? Because the dollar rails might be blocked or unblocked, right? But I think the two large questions is, how do we actually know that the decisions being taken in the trade war is based on actual facts? And the answer to this is we just don't know, right? So the second question we have is, you know, maybe Bitcoin doesn't work as a world reserve currency in terms of, let's say, trading fees and so forth like that, but it clearly shows that there's a pathway to running a balance sheet, for instance, in Bitcoin, or running a balance sheet in like a brick currency or like a basket of currencies, which also could include, you know, stable coins, right? And I think when you sort of look at some part of what the U.S. Treasury was talking about, right, with, you know, like, you know, building a treasury in crypto, such as, you know, Cardano and Bitcoin and others, right? I mean, that is, you know, that is real innovation, right? Now the question is, you know, is it number-based decision making? Can you verify those kind of things? But some of this is really good innovation, and I think, you know, big credits to UAE for going the innovation path with a type of CBDC. I really want to see them pulling it through and adding some features or functionality, like you rightfully say, which they didn't have before.
Thank you very much for this very intellectual discussion. Let's summarize it. CBDCs, threat or opportunity?
Both, I mean.
Audience, CBDCs, threat, raise your hand. Or opportunity? Very pessimistic crowd today. On this note, thank you very much for being here, and thank you very much for coming to Blockchain Live in Dubai.